So we're moving on now to hear from Edward Troup, who, as you heard before, was also a member of the IFS Capital Taxes Group, but is now slightly better known for being a second permanent Secretary and Tax Assurance Commissioner at HMRC, and this must be a very busy time for him, so we are particularly grateful to you for coming.
Thank you, Judith. A busy time, but always a pleasure to be amongst this audience and a lot of old friends. I'm very glad that John Avery-Jones is back. I'm getting to a point with these conferences where, with the exception of Malcolm, I'm getting close to being the person who's been attending conferences of this kind the longest. So it's very nice that John may long be with us. You know, he's going to always beat me by about 10 or 15 years. So it's very good to see you here. I'm also reminded by Malcolm's comments, and I don't know whether it was the 1987 or the 1989 conference, talking to John Isaac when we had been having a good discussion about ACT and allied subjects, and I probably rather incautiously sitting next to him at supper and saying something along the lines of, you know, what idiot dreamt up these rules? To which John, who was always a very modest man, but you know, with you know, a huge intellect, said, actually, that was me. So, you know, you do have to be careful at these things. Now, I have been, you know, attending events like this for many years, and I was talking to Jim Hines about what has changed and what has not changed, and of course, you know, the most abiding fascination for all of us is how much we personally change or don't change with the years. And I do recall, you know, a number of these events where I've talked about corporation tax, you know, in the past, talking about the race to the bottom and confidently predicting that, you know, we are all doomed. And then being slightly surprised, you know, like Mark Twain, finding that rumours of the death of corporation tax have been somewhat exaggerated. And I've also observed at events in the past that there ain't no one here but us chickens. You know, you don't on the train up from Paddington meet any corporations. They're just the crooked timber of humanity sitting there in all its manifest splendour on the train with you or taking your tickets. Actually, nobody takes tickets these days. It's all done by machines. You know, the corporations do not exist, and therefore, you know, we should be thinking about who we're taxing. Now, I think the interesting question is, have I been proved wrong in those two statements? You know, is it true that, you know, we are on a race to the bottom? And is it, in a sense, it's obviously literally true there ain't no one here but us chickens, but, you know, are corporations things that we should or can ignore when we're thinking about what the right design of the tax system should be? Now, I'm not going to talk on, you know, many of my favourite subjects because they've been covered comprehensively this morning. They may well come out of questions in a few minutes, but I was going to step back and, taking absolutely the cue from John Snape, think about things slightly in the context of political economy, politics, and, you know, why and how the tax system exists. Now, obviously, you know, I stand here as a serving civil servant. I'm not standing here representing the views of either Her Majesty's Revenue Customs or Her Majesty's Government. To the extent that what I say does reflect those views, of course, you can write it down and broadcast and do what you like. To the extent that what I say doesn't, then you better forget that I ever said it. But for those reasons, I'm particularly conscious that there's a budget in slightly under 300 hours' time. I thought I should, and taking the cue from the fact that this is about the first 50 years, I should step back a bit further in time. And for those of you who've you know, heard me talk on tax before, I've got some bad news. I'm not, apart from in this sentence, going to mention Pitt or Addington. But I've got some good news, which is I've got my good friend William Ewart Gladstone in the room with me. And, you know, as you know, Gladstone was the titan and the reformer of the 19th century. And I will not digress on his reforms of tax directly, but I wasn't aware until I did a bit of, you know, Wikipedia and Googling, or I'd forgotten from reading Roy Jenkins' excellent biography, that Gladstone had been the president of the Board of Trade in the 1840s. And of course he was, although not a member of the government in 1856, because it was then, I think, Palmerston's government. He was certainly very active, and he had a hand, you know, in that great period of the creation of so much of the modern state in something Judith has referred to, which is the Joint Stock Companies Acts of 1844 and 1856. Now, you might think that this is a sort of completely irrelevant historical diversion, but I can tell you it's definitely not, because Nicholas Murray Butler, also slightly later American economist, described the Joint Stock Company as the greatest invention of modern times, even taking into account steam railways, and I can't remember what the other thing he says in his quote. And I don't think you should dismiss that comment lightly, because what he meant, and Robert Lowe, who was the deputy president of the Board of Trade, who actually took the Act through Parliament, the bill through Parliament in 1856, set out at some length. And I will come back and actually give a bit of a quote from Robert Lowe's speech in a minute. What he meant was that what joint stock companies allowed to happen was a freeing up of everything that Gladstone believed in, which was the forces of free trade, the forces of entrepreneurialism, the forces that allow individuals to combine into enterprises, to pool their skills and capital, and to create wealth. Wealth not just in personal wealth, but common wealth and welfare for the entire country. And I think it is very easy, 175 years on from that, to take for granted what joint stock companies, or companies as we would refer to them, have contributed to the common good and the power that they have, unleashed or have been used as the instrument of in generating wealth. And creativity and activity and employment and clearly inventions in the proper sense for all of us. Now, I think that's important background because it starts to answer the question, why tax companies? You tax things for a number of reasons, but I think that's setting out the first reason for which you should think that you should tax companies. They have taxable capacity. They have something which they contribute to the economy, to the world. And ignoring the problems which we're facing about location and mobility and different types, what Gladstone and Lowe saw, and which has been what has been demonstrated over the period since, is that they do contribute to the wealth of nations, and that they therefore have intrinsically a taxable capacity. So I think keeping that in mind, and not dismissing the economic, technocratic arguments about that, I myself may have put forward about companies not existing. Actually, they do exist, and they have contributed in a way which creates taxable capacity. I think there are a couple of other reasons why we should tax companies, and we do, and we will continue. And if we meet here in 50 years' time, we will still be discussing this. A simple practicality point. Why do we have withholding tax on employers rather than seeking to tax every individual employee? It's just a matter of concentration of flows of wealth and money. Just from a tax administrator's point of view, it is clearly much better to tax at a single point a company than to seek to track down and tax every single one of its shareholders. And finally, and this in a sense is a point which I think will be followed up by Vanessa, there is what I would call democratic necessity. There is a public demand to tax companies. Whether that's based on the sort of real argument that I've put forward that companies are the creator of wealth, or whether it is simply because the democratic mass of the people see that they should be taxed. They should be taxed for that reason alone. Now, that is not to say that we should just, bow to the will of the masses, but it is to recognise that taxation is something which depends on democratic popular support, and that confidence in the tax system is an absolutely essential part of the ability to raise taxes by anything other than direct brute force enforcement. We are not living on the Rhine in the 13th century where confidence in the tax system was irrelevant. There was a chain across the river which would only be let down to let your trade through once you had paid your 10% or whatever it was toll on the value of the goods you carried. We live in a world where a tax system has to operate by consent, and it has to operate through confidence in the institutions and the governments which raise it. So in simple terms, why tax companies? You could say because they are there. Why rob banks? Because they are there. Now, that is conflating those three concepts, the taxable capacity, the practicality, and the democratic necessity into one statement. So please don't tweet that. So that I would sort of say by way of introduction, and to keep that as the very broadest political economy background to the discussions we're having during the course of the day. I will sort of pass quite rapidly over the next 109 years to 1965 or thereabouts, which I remember only because I got most of the summer off school for having my appendix out, which was, the greatest wheeze ever. Unfortunately, I only had one, so I couldn't repeat it. And look, I think the interesting thing, and it is quite interesting having sort of followed the track of this over the last, and I started tax in around about 1980 or thereabouts. So the imputation system, was relatively youthful, and certainly, there was a lot of this close company apportionment nonsense, and we spent quite a lot of time doing that and worrying about surplus ACT and goodness knows what. I think, and again, please don't sort of tweet this. You can sort of see the way tax systems were designed in the 60s and 70s, looked at. Representing a bit of a high watermark of what you might call sort of statism, or even some residual imperialism. The sense that you could actually sort of sit here, and I do mean here in the UK, and design a tax system for the UK. And yes, it had to sort of deal with the fact that there were countries out there, but in a sense they had to deal with them rather than dealing with them. So I think that, where, and I don't want to sort of contrast imperialism and globalization, too directly, but I think you can see the sort of shape of the tax systems and just the thought behind them. And you've got to remember the generation in the 60s were a generation that had, if not been brought up before the war, had certainly lived through the sort of end of empire, and whose parents would have, been quite imperial in their outlook. So I think that's quite an interesting point to think about in terms of how we should see, or how to put that into context. And Peter said, why haven't there been any, big consultative documents or plans about the tax system since then? Now, in fact, I picked Peter up on a sort of slightly factual point. There have been quite a few documents, and indeed, I think it was somebody talked about the corporate tax roadmap. So it's not that governments have not thought about the corporate tax system as a whole, they definitely have, but the lens through which they've thought about it, or had to think about it, has been different from the slightly more, the approach that was taken in the 1960s, and perhaps early in the 1970s. And I think that then sort of takes you to the paradox of globalization, that globalization, I don't need to explain it to you, involves these corporations and activities which are global in span and reach and activity and employment and customers and participation. But the paradox is that with globalization has gone, both empowerment of individual countries, empowerment of individuals, and a great flowering of individuality, so that tax systems actually, in a way, have had to look much more domestically, because it has not been possible to look with that same worldwide rich scope of the tax system, even though we have had to think globally. So they've had to work more internationally while actually being more domestic, or in the terms that we would use here, territorial in scope. And I think that is one of the paradoxes. And I think to a certain extent, it sort of is the answer to Peter's challenge. And I think it's absolutely right that if the sort of plans for the corporate tax system over the last decade or so have not sought to span the globe, it's because actually our relationship, all countries' relationship with the rest of the globe is slightly different from what it was in the 2 or 3 decades after the war. So that, I think, also gives you a bit of a sort of shape of how we should continue to look at tax systems, and a bit of a steer against thinking that we can return to. And again, I'm a great fan of economics. It's an enormously powerful tool, and the analysis that it gives us is incredibly insightful. And I will come on and say a bit about what I think we should be doing in the future. But I do think economics and economic analysis has to fit to the circumstances of the day. And I think there are some very good economic models for tax systems for any country which look globally. They just don't work in the globalized world of today. You need to take account of the fact that globalization requires a greater degree of territoriality in tax, which to a certain extent goes back to the third of my reasons for taxing companies, which is you need to have the confidence and support from your local electorate who are the tax raisers and the constituents for whom you are raising the tax. Now, before I sort of come back to Mr. Gladstone, who is here with me, certainly in spirit, I will sort of just digress briefly onto small businesses. And I think it's quite an interesting part. You've probably sort of heard what I'm talking about and thought about it as I've been talking and thinking about it myself in the context of large companies. But I think it is worth picking up the question of, well, how does the joint stock company model apply? And is it right that it should apply to the single person companies? And this is where I come back to the quote from the parliamentary stage of the Joint Stock Companies Bill in 1856, where Robert Lowe opened, and I would say that the bill went through incredibly quickly. There was unanimous support for it, more or less unanimous support, talking about the importance of freedom of contract. And he then used a paragraph which I think is wonderful, and it is quite hard to imagine a minister putting through a bit of company tax legislation through Parliament these days saying this. I am arguing in this bill in favour of human liberty, that people may be permitted to deal how and with whom they choose without the officious interference of the state. And I think that, it so sums up what Gladstone in that period was about. And it also, I think, gives you a guide as to whether we should, as has been suggested this morning but rejected, be saying you can't incorporate if you're a one-man band. It's effectively reinforcing the point that a joint stock company is a fantastically powerful tool for the organisation of human affairs into economic ventures. And the state should not seek to prescribe how it is used once it has given and demonstrated the value, as it has over the last 200 years, of that tool. What we have to do is we do have to cope with the consequences of that tool being so flexible, so useful, so capable of use, whether by the single person, the husband and wife, the small group, or the massive multinational. So I think, again, keeping that in our minds, again, should be a guide to how we solve this problem. And we do not solve the problem by trying to prescribe or proscribe what companies are used for or how they're used. What we should be doing, as you were trying to do this morning, and we will continue to do, is to work out whether and how we should apply tax treatments in a different way to small companies rather than large companies. But I don't want to go back over that debate because I think Judith and the discussion brought out both the challenges and some of the ways forward. And I thought, you picked exactly the right bit from David Gauke's speech. And in a sense, you interpreted it right. He was making the point that actually if corporation tax starts to move down below the basic rate of income tax, there are some challenges. So, and I would sort of, sorry, my slightly scrappy notes, I'm reading the wrong piece. Look, I think the other thing I would say about SMEs comes out of my third reason why we need to tax companies, which is to respond to the democratic demand and maintain the confidence. But the fact that we do need to tax SMEs, because to let them off or to undertax them would be wrong, also reinforces the need to tax multinational companies in a way that is seen to be fair and consistent, and make sure that when we seek to collect tax from the small company, the one-man band, the small family company, he or she cannot turn around and say, well, yeah, but look, whoever it is, PLC is using a company as well, and they're getting a much better deal than I'm doing. And we do need to think of the need to tax SMEs reinforces the need to make sure we have a fair and effective regime for taxing the large companies. And, you know, in answering my younger self, sort of suggests that the race to the bottom is not going to be something which we can live with in terms of maintaining a domestic tax system, which does not mean that tax rates may continue to decline. Although I would observe on that, by way of slight digression, that in the 50 years since corporation tax has been in existence, it has halved in rate. Well, there's some great figures which extrapolate the increase of obesity in the United States, which show that by 2046, 110% of Americans will be obese. And, you know, the obvious arithmetical or mathematical point is that the fact that it's declined from 40 to 20 does not mean it's going to decline from 20 to 0. It might tell you that it's halved in 50 years and it'll halve in another 50 years. It might tell you something else altogether. But one should be very careful about extrapolating data points, particularly data where you're effectively taking just 2 points. But I'm not an economist, so somebody else would tell you that as well. Right, I need to wrap up in a second. So I'm going to get Mr. Gladstone back in the room, and he's been here because he's always at my shoulder. And, you know, if you don't know everything there is to know about Gladstone, which I don't, you know, I strongly recommend you start on the journey because there is a lot to know about it, and most of it is absolutely fascinating, and some of it's very entertaining. He was still cutting down trees single-handed when he was 82. It was his hobby. When he, you know, had a bit of a stressful day, he'd go home to his estate and chop down a tree. I'm not joking. Now, if Gladstone were here, what would he be saying? Well, I think, you know, Gladstone was the believer in free trade. And I think he would have been incredibly pleased and incredibly excited about the way in which the joint stock company has blossomed and has generated the huge variety of activities and supported the huge creation of wealth which it has. So as a free trader, I think he would have, been happy. Gladstone was also a moralist. I don't think he was much fun, quite frankly. You know, Queen Victoria loved having audiences with Disraeli because Disraeli was, you know, just a bit of a wide boy. And Gladstone would literally, you know, lecture her, and he wouldn't lecture her just by sitting across the room. He would, you know, stand up and he would bellow. And Gladstone was someone who addressed audiences of 15,000 people, so he knew how to bellow. And Queen Victoria really couldn't take it. Anyway, sorry, but he was a moralist, and I think what would have offended him, and I'm making a point here, by the way, is that I think he would have been somewhat dismayed that some of the beneficiaries, and they are beneficiaries, of the gift of incorporation. Well, I don't want to be too sort of paternalistic, but, you know, it is in a sense a gift of incorporation, do not always acknowledge that with that gift, with that benefit of incorporation, there are obligations. I'll just leave it at that. And I think, you know, we should, and Gladstone would probably have lectured them by reminding them that they're bloody lucky that they are incorporated and look what they can do with it, and, you know, how are they behaving now. So that's my sort of slightly serious point, and I'll leave you to infer or tweet what you want from that. But Gladstone was also a great believer in the power of rational thought. You know, he was a great thinker and a great writer. And I think this is a sort of lead in the challenge for the next session you're going to have. I think you'd be surprised, given you know, the amount that we have done and learnt over the intervening century and a half, how little we actually understand about the way in which companies have created wealth. I think he would love globalization, but I think he would ask some pretty searching questions about how it worked and who benefited it and where did the wealth go, and when we taxed companies, who actually ended up bearing the burden. And I think you know, there's a bit of a responsibility on us, and as I say, I think it is for the next session, to answer some of those questions a bit better than we can, and to the extent that we know the answers, and actually I think economists do know quite a lot of the answers to those questions, to make sure that they are more widely understood. And I'm sure what he'd have done with all of this is he would have turned it into a finance bill, and as he did in 1853, he would have stood up and delivered a speech taking the finance bill through personally with a 6.5-hour budget speech, which is one of the great parliamentary actions of all time. It probably would have been 12 hours because he'd have quite a lot to deliver, but he would have expected that his audience would understand what he was talking about, and I think one of the challenges is making sure that the audiences outside this room understand what we know and what we're talking about. Thank you very much.